So we'll have to be careful. So plan for today. Look, if we break over yesterday's highs, we'll start kind of our or what we'd call like a gap and grind mode where you just kind of grind higher all day. We're starting to kind of already see that. We have to just be aware of two things. When you're on a day 1, day 2, day 3, day 4, day 5, day 6, day 7, when you're on the 7th day of a move, you can kind of get like these small rug pulls like out of nowhere. So you have to be just a little bit more careful, like when you're aggressively trading or day trading to the long side. What I mean by rug pulls is like you won't get like a market crash or anything like that. But like what you'll see is like you may be grinding higher all day and then poof, like you'll just get like these kind of retracements. And that happens more and more as you get more overbought. So as you get overbought, like the odds of that happening come higher, where you get these kind of 3-4 point shakeouts, 1-2% shakeouts in the market, and they'll come really fast and out of nowhere. So you have to be just really careful, like when you're trading a market and you're coming in like you're getting really overbought. That's just going to be the nature of the game. Now, frankly, the way things are going, I mean, we're like 227. We're like 3-4 days from probably being at all-time highs, at this pace. Most people probably say like that's a short, but we don't really know, right? We don't know till we know. Most likely, the likely scenario is we just keep grinding. We'll have some 2-3 day pullbacks or consolidations, but we just grind past highs, and we'll all complain about it, wonder how it happened, but it'll happen. That's usually how those kind of breakouts work. Is like nobody wants it to happen, everybody's wondering how it happened, and then boom, like it's off to the races. So just something to kind of be mindful of. We're in this kind of gap and grind mode where you'll have strength and then you just may push your way. And, when that happens, it's just a stock picker's market. You want to focus in on more stocks with catalysts and stuff like that. I know, everybody's really watching this index today. Is it, at $42, I don't know. Like, do you want to chase this thing up 70% today? It's not like it trades a little bit thick. It's not necessarily a stock that skips all the time. But like we'll have to watch this thing. I can't play this thing at the open up 70%. We'll have to let it pull back. If it can pull back $3, $4, $5, $6, $7, into like some EMAs, or you get some kind of rounding, pattern, then I'm okay with it. Otherwise, like you're just not gonna get the rug. These type of things when they go this wild, the rug pulls just come like out of nowhere. You really gotta let it settle up and have a base. And then when you're up this much and you get that much volatility in a name like this, make sure like you're trading a little bit smaller size on it. Like if you go in with like 2,000-3,000 shares of this thing, it's moving around, $3-4 per candle. So like you can't corral it if you oversize it. That's the one issue. Like with the really volatile stocks is people always oversize, and then what happens is you can't corral the volatility, and then when it dumps, you're just out of it too quickly. That's just that's the nature of the beast on this. So I've got it on the watch list. It's not my main priority. If it goes bonkers, there will be secondary plays besides this that get picked up. So those are the names I would prefer to focus on because they'll be less extended. You'll have INO, right? There's a whole host of these. INO, mRNA is something we trade pretty much every day. And then, this Codex is a pump and dump, but, you may run this thing to 20. This thing's a turd, but it's setting up. So, you'll see a little bit of action in a couple of these names too. So I roll with these for now. Let's see like what other stocks have earnings out today. Yo, this D-Dog, like, we really missed the boat on this. So this thing had its earnings out. You've got all sorts of room on this. Now, it's been running for like a straight month. You can see here, this thing's running for a straight month. So I'm not that keen on it. I'm going to put it on the watch list, but frankly, I wouldn't be surprised to see this thing kind of roll over. When they run like that hot, the best earnings plays, like they're going to break out, but they're not running like 10 days into the breakout. So I'm like, I give that a B-. That's not my ideal type of play. SPG, this is Simon Property, reports lower, blah, 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 withdraws guidance. This earnings season's been kind of a big nothing burger because most stocks are withdrawing guidance anyways, right? Because everybody knows they're going to stink. So, stock has earnings out. Nobody cares. Everybody expects them to be zero. So when they're not zero, they're actually going up. Go figure, right? This SPG's all right. It's a thick stock, 300 million share float. It's a REIT. REITs stink to trade. REITs, banks, and what's the third holy grail of suck in trading? REITs, banks, and what's the other one, guys? You guys know. Retail. Oh, REITs, retail. Oh, yeah, REITs and retail and banks. 3 worst things to trade. 2 best. If you get a list of stocks, you always go tech, biotech first. They move the best. They have the most rowdy moves. Tech is obviously it's the cleanest. Biotech can get the most parabolic. So those are always the 2. But REITs, retail, stink. REITs, retail, stink. Oil stinks to trade for the most part. Banks stink. Gold stocks stink. Man, there's more stink than good. I'll tell you that. MGNX. Biotechs are hot. First of all, biotechs are hot. What you want to do is have a list of biotech stocks today. With NVAX going, you have to have more than 1 or 2. You're going to have to watch a stock like MGNX. It's got all this momentum. You can see yesterday, man, this thing got picked up out of nowhere. Look at the trend on this thing. It's a $7 move right there. Mr. Hunter, what's up, baby? That's where you want to be. Easy thing to do. If you're looking for a way, say you've got a stock like an NVAX, or it could be any stock, you got a tech stock, whatever it is. The easiest way to just make a list of, the easiest way to make a secondary list is, on your TC2000, go under watch list, type in a sector, right? So say you got biotechs. So you want to pull up the components here. So you got industries, components. You can do NASDAQ index. You can do the industry. You can take either one of these. So you see here, you've got an industry here of 568 names, right? You have 568 names. So now you got to narrow this thing down. So what you want to do is essentially build a scan inside the scan. So you've got a biotech list. So what you want to do is click scan. And now what you want to do is put in some conditions. Right? So, I want to put in conditions so I can get this 568 down into something reasonable. So, you come in, you can use mixed time frames and stuff, but, first, so take price. If you want no small cap stocks, you do greater than 10. But some of you guys like to trade small cap stocks. So, what you would do is, you would do less than 10, and now you've got, a filter. Now, we want to add some other secondary filters. So, second one you can do is volume. So now you can add in some volume. So say you put in 500,000 shares. So now what you'll start to see is that, right? Now you're starting to get your list start to narrow down. Now you can start adding in stuff average true range. So say I want a stock that only moves over $1. So now what's going to start to happen is you'll start to take a longer list and break it down. So that's the easiest way to kind of just go about and do these things. So you see here, volume over, let's say, what you want to do. 500,000, but only on the daily time frame. And then now like you start to build things out. So that's like how you want to kind of go through like a particular list. And then once you have it, start adding sort functions. So you can do like, okay, what's up the most the last 90 days, the last 5 days. Now you'll start to get like a nice, easy way to just add some functions in it. And you can use like trend intensity, Momo intensity, so you can kind of start to see like what else is cooking. And then you're good to go. So that's really the easiest way, I think personally, to do it. Is like, but you got to sift through all the stocks. You know, that's where the homework comes in. You could use a Labu ETF. You know, if you think biotechs are really going to rip today, Labu will work. You know, it's up like 5, 6, 7 days in a row too. So, you know, my issue on something like this, when you're up 7, 8 days in a row, these things just dump out of nowhere. You know, the IBB index up 7 days in a row too. My worry is that like if NVEX pulls back, you know, with these things being so extended, at the top of the Bollinger Band, you do get a little bit of a dump. So you got to be somewhat careful on these things today. 50-50 on this. But I'll tell you, these are the favorite biotechs for today. We got INMD, which is not even a biotech, but most people are not smart enough to figure that out. It's like a medical device company, but it'll run with the biotechs. Like nobody cares, right? In a pump market, it doesn't really matter. You could go out there and say, you know, like, hey, this company could be like some dog pooper scooper company, and all of a sudden they sprinkle some salt and they throw in, you know, some little things here or there. Next thing you know, you can label it a biotech company, launch it to the moon. That's the market we're in. So INMD, add that to your biotech list. And I think this LVGL is probably our go-to for today. This LVGL is our go-to for today. You can see here, so this is your earnings gap here. Now you got like a really nice tight consolidation on your 15-minute chart. If this thing starts to base out right here and it busts out of this trend line, so a 15-minute chart, this one's gonna have some juice. So INMD, LVGL, those are my two faves. All right, those are my two faves, you know, for potential. Now you don't trade them just to trade them. Remember what we have to have. You have to have an intraday pattern to align with what you see on the daily. So like if you have a trading idea, anytime you have a trading idea, doesn't mean you buy it. What you have to do is wait for a pattern. A stock like an LVGO, it actually has good enough range. You could take this on a red to green, a quick pullback buy, a red to green, a quick pullback buy, or an ORB. The float on LVGO is low enough where you can take this on an ORB and it will work fine. ORB means opening range breakout. You need minimum 3 sideways candles once the market opens, and then a break of the range, all right? Don't preempt it. When you preempt patterns, that's when you get a higher chance of failure. Like if anybody's ever bought something, for, on the first candle, it just jumps out of nowhere, that's what typically happens. So LVGO, INMD, both of these are hot, but you got to wait for an ORB and then you're good to go. All right? Roku, you got a hot little consolidation coming out here. This one's got a good enough range. Or if you see here like a couple days ago, this thing cooked like 7 points intraday. As you're starting to build out this range, like you're getting right into that sweet spot with the market being as hot as it is and with tech being as extended as it is, that's where you're going to be. There's going to be tech stocks that haven't moved that start to get picked off one by one. Roku is one of them. When you get an earnings play, so like this move primary here was because of earnings. When you get a big pop on earnings, if you sit there and consolidate for like 2 weeks, 3 weeks after earnings, what will typically happen is you'll build up that range, like that congestion will build up steam. So when you finally start to bust loose out of there, you get a really, really powerful move. You can see here you already had the earnings, so it's out of the way. The second part is the longer the base, the longer the secondary move. So when you come out of this base, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? 2, 3 weeks. So when you come out of that range, you have an expected multi-week run that comes with it. The longer the base, the longer the move. So add that to your list. VTIQ, this thing is going parabolic now. You're up from 13 to 22. If we have a big push today, one more big push, I think we get short on this. A rubber band short is an overbought short play. It's a counter trend trade. I don't like doing counter trend, but every blue moon you kind of have to. Key facets of a rubber band trade. You need to stock up minimum 3 big up days. So we're on day 4, all right? So that's good. You want candle completely outside the upper Bollinger Band, completely. Candles outside the upper Bollinger Band. And then you need overbought stochastics. Anything over 80 is overbought. Anything over 90 is ideal. So one more push, we should get close to 90. Then we look at a potential counter trend short. Now you don't take a short just because you see a short. What you always want to do is wait for intraday pattern. So you go in, green to red, or you look for one more big push, you start to see lower highs, and then you start to build out the trade. When you get a stock with this kind of momentum, though, do not step in front of it. Meaning, like, it could still keep running. 24, 25, 26, you don't necessarily know. You got to wait for an intraday pattern, then you're good to go. Does that make sense? Good. Space. You know, they had basically a secondary yesterday, 25 million shares. It frankly, it held up pretty well. You know, usually like when you get some of this thing, when you get some of this type of news out, like where they may sell up to 25 million shares, it usually puts a pretty big overhang on a stock. But if you absorb it, then it'll hold. So I would keep that on. I would keep that on your particular list for now. Not a priority yet unless it breaks over 20. If it breaks over 20, I think we're good to go. Not that one. Now this ENPH. I've got this on watch for a potential rubber band short too. You got 1 day, 2 day, 3 day, 4 day, 5 day, 6 days. This is day 7 of the move. You're already at this old resistance spot from a couple months ago. If the market pulls back today, this is like a top of the list for a potential short. This one and Twilio, these both are getting long into. Twilio's almost doubled in the last few days. One more big push to 200, but I need this thing to speed up. Like if it just grinds higher, like $5, $6 a day, I'm not keen to short it. What I want to see is like one more big push, and then we'll be good to go, right? So get this thing speeding up towards 200. We'll take a potential short on it. And then, I got one last watch on this for today. SDC's kind of starting to go a little bit bonkers here. Yeah, you can see this one. If this thing starts to speed up, if you start to get this thing, into this kind of range up here, 12, 13s, I think we'll be able to take this thing for short. This thing used to be like $3, but it's still a big turd. SDC is the worst, man. Smile Direct. Like, you ever seen a little kid with like Smile Direct braces? He ain't got no good teeth. They're ruining people's dreams. No, I'm just messing. 1, 2, 3, 4, 5, 6. One more big push towards 15. We'll be good to go. Patrick, you're alive. Yes. All right, that's the list. INMD, LVGO, the faves. Stuff like Tesla and stuff is like a daily trader. Watch these biotech stocks. They're all moving around today, so we got to be just careful. Make sure BYD is a daily trader at this point. I will not chase NVAX at the open. I won't chase it at all. If it drops $5, $6, $7 and starts to grind and hold, I'll take a look at it. Otherwise, it's just a leave alone. You don't got to chase anything. Remember this, guys, today. We are on day 7 of a move in the market. We're getting very close to highs. We've got to be careful here. You'll have intraday rug pulls randomly as you get more and more overbought. This is the trickiest time in the market because you're so overbought that it's hard to find good longs. but you're so strong that you can't really short for more than a few minutes. That sweet spot in the market is, I find, the trickiest to trade sometimes. So just be kind of mindful of that. I got shop on the list too. It's not ready for a swing or anything, but it is a good day trader. You know, it's a fine day trader, but it's not ready for a swing. It's not ready for a short either. I think it needs one more big push. Guys, let's trade well. Yesterday was awesome. We made good, quick work out of it. You know what we got to do? I'll be in the chat room all day trading in our Discord channel. You guys are more than welcome to join us. I'll be on screen share, shredding. You know, I trade live all day. You know the drill. Let's go do what we do. Let's have a little fun. Guys, trade well, trade fast, manage your risk. You know the drill.